Something unusual is happening in the Iraqi dinar space right now, and it's starting to catch the attention of serious observers because this isn't just another rumor floating around online. It's a pattern, one that raises important questions about what could be happening beneath the surface. Let's break it down carefully. Over the past few days, reports have been circulating claiming that some individuals were offered up to $1 per Iraqi dinar in private transactions. And here's the part that stands out. They refused. Take a second and think about that. In a market where uncertainty has existed for years, where many people have waited patiently for movement, some holders are now reportedly turning down immediate cash offers because they believe the value could go significantly higher in the near future. That kind of behavior doesn't happen randomly. It reflects expectation, it reflects belief, and in some cases it reflects information, or at least perceived information. But before we go any further, we need to pause, because in financial markets, especially in spaces like this, it's critical to separate verifiable reality from speculation. So let's look at what we actually know. Right now, the Iraqi dinar operates under a controlled exchange system. Its value is not freely floating like major global currencies. Instead, it is actively managed by the Central Bank of Iraq through monetary policy, foreign reserves, and regulation of the banking sector, and the official exchange rate is far below $1. Which immediately raises a key question. If private buyers are truly offering rates that high, how does that fit within a tightly controlled financial system? Because under normal conditions, markets don't function with massive price gaps between official rates and private deals without serious complications. We're talking about legal restrictions, liquidity limitations, and regulatory oversight, all of which makes such scenarios difficult to execute at scale. For a currency to move toward that kind of valuation, you would typically expect a sequence of clear and visible steps. Things like official announcements from central banks, adjustments within the banking system, coordination with international financial institutions, and transparent policy changes. These are not subtle developments. They are deliberate, structured, and publicly communicated. Now here's where the situation becomes more interesting. Even though these reports should be approached with caution, they do highlight something very real: long-standing expectations within the dinar community. For years, many observers have believed that Iraq's currency could eventually strengthen, and that belief isn't baseless. Iraq is a country with some of the largest oil reserves in the world, consistent energy export revenue, a strategic position in global markets, and ongoing efforts to rebuild and modernize its economy. These fundamentals matter, but here's the key distinction. Strong fundamentals do not automatically translate into rapid currency appreciation. Exchange rates are influenced by a complex combination of factors, including inflation levels, money supply, fiscal policy, political stability, trade balances, and international confidence. And in Iraq's case, many of these factors are still evolving. This is why the idea of a major currency shift happening within 2 to 3 weeks should be viewed very carefully, because historically, large-scale monetary changes are not sudden. They are planned over time. They are tested. They are implemented in phases. Central banks prioritize stability above all else. A sudden, unannounced revaluation could disrupt trade systems, banking operations, and economic balance, and that's something policymakers work hard to avoid. There's also another critical factor to consider: verification. In financial markets, credible information is supported by data, institutional confirmation, and transparent reporting. Without those elements, stories about private offers remain difficult to confirm. They may be real in isolated cases, they may be exaggerated, or they may be misunderstood, but without evidence, they remain unverified claims. However, stepping back, there is a bigger and more important picture. The continued attention on the Iraqi dinar reflects something deeper: Iraq's long-term economic potential. This is a country with vast natural resources, a growing population, increasing infrastructure development, and expanding financial reforms. Over time, if these trends continue, they can strengthen economic stability, and stronger economies tend to support more stable currencies. But that process takes time. In the short term, Iraq still faces challenges. Its economy is heavily dependent on oil. Government revenue fluctuates with global energy prices. And financial reforms are still in progress. These factors create both opportunity and uncertainty. At the same time, progress is clearly happening. Iraq is working on modernizing its banking system, improving financial transparency, expanding digital payment systems, and strengthening international financial relationships. These are not small steps. They are part of a long-term transformation. Now let's talk about the human side of this, because markets are not just driven by numbers. They're driven by behavior. The idea that individuals are refusing offers highlights a common pattern: belief in future value. Investors in many markets choose to hold assets because they expect greater returns over time. But belief alone is not enough. Successful decision-making requires careful analysis, risk management, and realistic expectations. So what should you actually focus on? Not rumors, not speculation, but real indicators. Things like central bank policy updates, government economic reforms, banking sector development, inflation and growth data, and international cooperation. These are the signals that shape real outcomes. Because here's the reality: major financial changes don't happen quietly. They leave evidence, they show up in systems, policies, and data before they fully unfold. So when you hear stories like this, the most responsible approach is not excitement, it's awareness. To summarize, yes, the reports are interesting. Yes, they reflect strong belief in future value. But without confirmation, they remain speculative. What is real is the bigger picture. Iraq is evolving, its economy is developing, its financial system is improving, and the people who navigate this space successfully are not the ones who react to every headline, but the ones who stay informed, patient, and grounded. Because in the end, understanding will always outperform emotion,